Two executives of a Kenyan bank that was placed under receivership last week were grilled by detectives for nearly 11 hours today. The former chairman of Chase Bank Kenya, Zafarullah, and the former CEO of that body, Duncan Kabui, were ordered by the Inspector General of Police on the 8th of April to surrender themselves to the authorities after more than 50,000 people were unable to get access to their money because the bank, of course, was put into receivership last week. As Robert Nagila reports, the impact of that closure and what it's having on the lives of those affected is extremely heavy.
The streets of Nairobi are always full of conversation. The number one topic, politics. Always politics. But in the last week, that's all changed. The topic on everyone's lips, banks. They have all our money, shouts this gentleman. He's among 55,000 depositors who until last week held bank accounts with Chase Bank Kenya.
I have a lot of people who are chasing me around in town right now. I cannot pay my debts.
Francis Miner's story is all too familiar to many Kenyans. Like them, his business and personal accounts were all held at Chase Bank. The blue-eyed boy of the industry, Chase Bank was placed under receivership after depositors withdrew a record $80 million in 6 hours. It emerged a senior bank executive had given himself a loan of $79 million without security.
The bank was under pressure, came under serious pressure. There was a run on the banks, as we said in our statement. And clearly, the bank could not sustain this loss.
We've been outside here for about 2 hours, and these are some of the scenes that we've been witnessing. People coming to read the notice put out by the Central Bank of Kenya on the receivership of Chase Bank. It is still not clear when they will get their money back. What is clear, though, is that confidence in the banking sector by the public is at rock bottom. James Mora, a businessman from Mombasa, says his business is at a standstill.
All my money was in there. Right now, I'm just grounded. So I'm trying to find out what to do next.
His sentiments are shared by Libon Abdullahi, whose family operates a business in the Nairobi suburb of Eastleigh.
They want to take their monies to international. They don't have faith in it because they see Kenya has become a corrupt country.
In the last 6 months, 3 banks, among them Chase, have shut their doors. The central bank governor says they'll bail out financial institutions in the dire straits. Kenya's President Uhuru Kenyatta has promised depositors they will get all their money back and the looters forced to repay. Assuring words, but not enough for the tens of thousands whose lives are now at crossroads. Robert Nagila, CCTV, Nairobi, Kenya.
Right, then let's dig deep into the details of exactly what's going on in Kenya's banking sector. I'm now joined by Sunil Sangha from Orion Advisory Services. Thank you for your time. Yesterday evening, the governor announced this liquidity support facility that will be available not just to commercial banks, but also to microfinance institutions as well. But what's the difference between that and the discount window?
Okay, I think the discount window is, firstly, it's on an overnight basis. It's at a punitive rate, currently at 17.5. And generally, banks are discouraged from going there except in very rare circumstances. I think the liquidity support facility that has been announced is much more of a longer term facility. 28 days is what we are hearing.
Yeah.
It's clearly meant to address specific challenges in the system and meant for banks who are facing liquidity challenges due to no fault of their own, as has been stated by the Central Bank.
Can be interpreted to mean a couple of things. But yes, the bit I'm most curious about is the lack of detail around exactly how it works. I mean, for example, if I come to this facility as a bank, what do I put up as collateral? Government paper, cash deposit, what?
Well, typically, it's the details are not available in the public domain as yet. I'm sure it's available with the banks. But yes, the central bank would lend against government securities, that is, against treasury bills or treasury bonds.
17.5%. We've been there since what, 2011? I believe that's the last time the discount window rate was adjusted, wasn't it?
No, I think, it was adjusted about 2012, I believe.
Yeah, yes, because that was essentially a response to the arbitrage banks were allegedly, let me use that word properly, allegedly having with the Kenyan shilling. Last year, when National Bank put out their third quarter numbers, you were very vocal about them on Twitter. You basically called them out for their low provisioning levels.
Yes.
How endemic a problem is that?
Well, at that time I was focusing more on National Bank as a listed entity,
Yeah.
and what response the results should have had in the stock market. And at that stage it was very apparent to me that the profits which were being reported as their best ever performance were clearly based on bringing their bad debt provisions down to very low levels. Now this was a specific case to National Bank. I don't think this is a problem across the industry. I think across the industry the level of provisions to non-performing loans is about 40%. Yes, there are certain banks who have their provisioning level or loan loss coverage at below 20%. So those would be the banks to be concerned about, but that's not more than 2 or 3 institutions.
So essentially it's not a systemic risk that would essentially justify the level of panic we're seeing now.
No, I don't believe it's a systemic problem.
Let's talk about auditors, because that's one angle to this story that hasn't really gotten a lot of traction. Even the finance minister commented on it today, where they argued about the role of auditors in this crisis. Would it help if management letters that auditors actually write to the board and to management once audits have done are then made available to the shareholders, or even available to shareholders directly without going through management or through the board?
But I think firstly, banks in Kenya have fairly comprehensive reporting standards, and they're reporting quarterly to the public. Now the issue is firstly what are we doing with those reports? Are we analyzing those reports sufficiently? I mean, if somebody was looking at the reports, for instance, anybody studying the reports should not have been surprised when Dubai Bank was placed under liquidation last year. Again, take the case of NBK. I think the numbers were very apparent when they were reporting their performance in second quarter and third quarter last year. Unfortunately, very few in the business reporters or analysts actually picked up what was happening. So I think the information was available, but what one saw in terms of the reporting was only the press releases which were put out by the management rather than any analysis of the numbers. So I think if one goes into the numbers, there is sufficient information available.
Even without looking at all these reports?
Even without looking at management letters, I think that would cause more confusion in the market.
But going back to what you've essentially said, quality of coverage is clearly problematic. But again, in addition to your conversation that you had when NBK's third quarter numbers came out, and I remember looking at the conversations you were having, and a lot of people just didn't understand what you're on about, number one. Number two, shareholders just didn't act. So aren't we essentially going back to that situation? Because once this crisis is over, we haven't institutionalized the discipline that Dr. Njoroge has brought to the table, and shareholder apathy really hasn't changed. That's the norm in corporate Kenya. Aren't we just heading sleepwalking, essentially, back into the crisis again?
Well, I wouldn't say that. I think every crisis has a set of responses, and typically you will see measures coming out of this crisis which would be good for the long-term health of the industry. Yes, it does happen when there are no problems for a number of years, when there is no crisis. And I think this banking crisis, we have not had anything in the last 10 to 15 years.
Yeah, well, except Charterhouse maybe, but that was one
even
bank.
that was one bank, and more than 10 years ago, and for very specific reasons. Yes, a certain set of complacency does tend to creep in over time when things are going smoothly. I think that's human nature. You really can't do anything about that.
And hopefully people can arbitrage against that. We'll have to leave it there for the time being. Thank you very much for your time this evening.
Thank you, Rama.
Right, we've been speaking, of course, to Sunil Sanges from Orion Advisory Services. We'll keep you up to date with, of course, the latest developments on the Kenyan bank crisis and the efforts being made to resolve it right here on CCTV.